Welcome to today's Q1 earnings result hosted by Rivian. At this time, all participants are in a listen-only mode. I'll now turn the call over to Derek Mulvey, Vice President, Finance.
Good afternoon, and thank you for joining us for Rivian's first quarter 2025 earnings call. Today, I am joined by RJ Scaringe, our CEO and founder, Claire McDonough, our Chief Financial Officer, and Javier Varela, our Chief Operations Officer. Before we begin, matters discussed in this call, including comments and responses to questions, reflect management's current views as of today. We will also be making statements related to our business, operations, and financial performance that may be considered forward-looking statements under federal securities law. Such statements involving risks and uncertainties that could cause actual results to differ materially.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodhi, and I am your host. And on today's episode, we are going to cover Rivian's Q1 2025 earnings call. But before we get to that, I have a question for you. I'm working on something, and I'll probably do a segment on this show, but I'm working on something on how to think like a first responder in an emergency. And I'm not necessarily talking about if you live in, Tornado Alley, or if you are used to hurricanes in your area. I'm not gonna, the whole thought is not to how do you survive a hurricane or how do you survive a natural disaster, right? It's more of what happens if something that doesn't occur regularly in the area that you live, like LA doesn't typically have the level of wildfires that they had recently. So, or what happens if you come across an emergency, like a house is on fire and you happen to be driving by, or somebody is drowning, or whatever. I'm trying to think of a segment, or I'm trying to write a segment on how to think like a first responder in an emergency. Here's the thing. I've been a first responder for 30 plus years. If you count my time as a volunteer when I started at 18, that would be 32 years ago. This year, by the way, this probably July. So I don't know if some of the things that I am thinking about are too obvious. Some of the things seem very obvious to me, but I want to know what are your questions? Like, if you had a chance to sit down and we're talking about emergencies that happen. Like I said, it could be a drowning at the pool, a drowning in the ocean. It could be a wildfire. It could be something that just kind of pops up. It's an emergency that you're not normally equipped to deal with. Like I said, if you live in Tornado Alley, then, tornadoes, you take them seriously, but you know how to deal with a tornado. I've never lived through a real tornado, so I would imagine that you'd be much better at handling that situation than me. It's more of the something happens in front of you kind of a thing, or something happens within a very quick timeline that you have not experienced before, but it's an emergency. I would like you to send me, if you don't mind, the kind of things that you want to know about. And again, it's not specific to an emergency. It's how to break the emergency down into small pieces so that you can recognize what the emergency is, you recognize what the dangers are, and you kind of go through your options. And then that comes to a resolution. So I've been thinking about this for a while. When I was in Thailand, there was a bridge collapse. This is what kind of spurred all of this. And I was well far away from the bridge collapse, but there was a bridge collapse. And, in the times that we live in right now, there's all sorts of wacky things like, a bridge collapse isn't that uncommon here in the United States anymore. So what would you like to know? Just send me your questions so that when I develop this, I'm kind of working on this. When I develop the segment, I can answer those or address those questions. I don't know if I would answer them specifically because there's too many what ifs. If you're, curious about what if a jumbo jet crashes into an apartment building at the same time that a bus happens to hit the same building. What if that? Well, that's maybe not something that I can address because that's a big what if. But what would you like to know to keep yourself safe, to make a difference in an emergency, and maybe save somebody else's life? Or maybe not, because that is definitely one of the options when you're faced with this kind of thing. Do I risk my life to save this person's life, especially if there's a very low chance that either you're going to survive or maybe somebody already hasn't survived? Are you going to risk your life to save something or someone that's already lost? So anyway, I know this is very heavy, but I've been working on this since April, and I feel like I need to stop talking to firefighters about it and start talking to people who are going to be put in this situation. What are the kind of things that you would like to know? Send me an email, Bodie, BODIE at 918digital.com. Again, if you are asking about specifically what do I do in a flood, what do I do in a hurricane, what do I do in an earthquake, this isn't that. This is what are you going to do when you come across something that it's not that you're not equipped to handle. It's like it's not in your everyday bread and butter. Oh no, what am I going to do now? Kind of a thing. That's more what I'm curious about. Okay, now having said that, we're going to talk about Rivian's Q1 2025 earnings call, and I am genuinely excited. Rivian's got some cool stuff going on. So let's start off with the founder and CEO of Rivian, RJ Scaringe, and let's hear his opening remarks. Now, just like I do on all of these earnings calls, I do want to let you know I have added these opening remarks so that they work for this program. If you would like to listen to the full earnings call, then I highly encourage you to go to Rivian's investor relations page, and you can download, or you can go to YouTube. I'll put links in the show notes, the full earnings call. So if you are more interested than what I'm talking about, you could absolutely go and check out the whole earnings call. All right, let's start off with RJ's opening remarks.
During our call, I will highlight key developments in the first quarter and provide an update on the progress we're making against our value drivers. First, I'm excited that Rivian delivered a second consecutive quarter of positive gross profit, with a gross profit of $206 million. This reflects an outstanding effort from the team and a continued focus on cost and operational efficiency. Rivian has now met the gross profit milestone with Volkswagen Group and expects to receive $1 billion in funding at the end of June, which Claire will provide more details on in her remarks. Customers continue to love our brand, our vehicles, and our products. In the first quarter of 2025, R1S remained the best-selling SUV with a starting price over $70,000 in California, and the R1S was the number one best-selling electric SUV in the United States with a starting price over $50,000. Part of what customers love about Rivian is the seamless integration of technology into the product experience and the enhancements that come with our over-the-air updates. One of our most critical technology focus areas, which customers will start to see the output of, is our Rivian Autonomy platform. With the launch of our second-generation platform, we entirely changed the perception stack and compute. Our R1 vehicles now have 55 megapixels of cameras and more than 200 TOPS of onboard inference. We designed this platform around an AI-centric approach where the vertically integrated technology hardware has enabled us to build a data flywheel for training our model with an end-to-end approach. With the scale of our second-generation fleet growing, the strength of our robust sensor set feeding our data flywheel is enabling an important acceleration to our technology. The metaphorical plumbing for training our AI driving models is in place, and the resulting benefits are just starting to be seen. We believe control of the data flywheel and associated autonomy platform will be important for autonomy development, which we expect to have a greater impact on consumer purchasing decisions as we look towards the second half of this decade. We recently launched hands-free, eyes-on driving for our second-generation vehicles for highway driving, and this is the very start of a steady stream of ongoing enhancements which we plan to make. We are focused on delivering turn-by-turn autonomy as quickly as possible while expanding from hands-free eyes-on to hands-free and eyes-off. We believe eyes-off functionality and autonomy in urban settings will enhance the overall product experience. Considering our broader AI work, including Rivian Autonomy, there are several product and technology advancements which we've been working on but not yet shown or discussed. This fall, we plan to host an AI and Autonomy Day where we'll share more of our product and our technology roadmap. I'm really excited to reveal more of what we're doing here. As Rivian continues to innovate through AI, I'm also excited to announce Aidan Gomez is joining our board of directors. Aidan is the co-founder and CEO of Cohere, and he brings extensive experience enterprise-wide across AI and is a terrific addition to our board.
Okay, just going to break in here real quick. The opening remarks, pretty standard, right? They had a profitable quarter, which Claire's going to touch on more in her opening remarks. Claire McDonough is the CFO for Rivian. Rivian's set to get another $1 billion investment from VW Group, which is great for the company. R1S is the best-selling SUV, starting with a starting price over $70,000. And he touched on autonomy. I'm going to have to look what a data flywheel is, and I know some of you probably know what that is, but I'm going to have to look at that into that a little bit further. As far as hands-free driving goes, that's cool. And really the most kind of exciting thing that I'm looking forward to in 2025 is their AI and Autonomy Day, which is going to be this fall. Next, RJ is going to give us an R2 update.
In parallel to technology development, Rivian is making significant progress in R2, including the start of our validation builds and the continued work on a 1.1 million square foot expansion to our Normal, Illinois manufacturing facility. We also announced the construction of a 1.2 million square foot supplier park in Normal, for which much of the building's construction is complete. This supplier park will help us further reduce costs for our normal production. Next year, we plan to start construction on our Georgia facility, which is planned to provide an additional 400,000 units of annual capacity for R2 and R3 once fully built out. Rivian's long-term investment in technologies such as autonomy, software, electrical hardware, and propulsion has provided substantial cost and performance advantages. For example, our development of the R1 zonal network architecture and associated software is the foundation of what's going into R2. With the expected scale of R2, our investments in this technology begin to build a structural cost advantage, which is a core element of delivering R2 at a price point expected to start at $45,000. Rivian's enterprise readiness for R2 stretches beyond just technology, design, and manufacturing for the product. It spans the entire organization as we scale our systems, processes, and infrastructure for rapid growth. I couldn't be more excited for R2's launch. Last week, I was driving an R2 prototype, and the vehicle is just incredible.
Now, I really do believe that the R2 is going to be a really cool vehicle. When a CEO says something is incredible, it could be. When I start hearing CEOs saying, you know what, this product was garbage and we shouldn't have built it, then I'll take them seriously when they say, oh yeah, this is incredible. But I feel like the R2 is going to be a big hit. Still planning on starting at $45,000, which is great. RJ talked a little bit about the supplier park, which will lead us into the next part of the opening remarks, which is the global trade situation that we got going at the moment. So let's go ahead and listen to that.
Looking externally, the global trade, regulation, and policy environment is also top of mind. This is complex, multi-layered, and rapidly evolving. It impacts our global supply chains, trade, and consumer sentiment. We have 100% U.S. vehicle manufacturing, and a majority of our bill of materials, excluding cells, are sourced from the U.S. or USMCA qualified. However, we are not immune to the impacts of the global trade and economic situation, which we expect to impact material costs, material availability, capital expenditures, and the demand backdrop. Importantly, as previously announced, the LG battery cells for R2 will initially be produced in Korea, but these cells are expected to be produced in Arizona starting by early 2027. With thousands of employees in the U.S. and more than 2 million square feet of new construction underway at our Normal, Illinois campus, Rivian shares the President's excitement in expanding domestic manufacturing capacity and continued U.S. technology leadership, I can't wait for R2 and the long-term potential of our midsize platform, which we will build in our Illinois facility and future Georgia facility.
So it sounds like the Georgia facility is coming along in terms of progress, maybe not in terms of being built yet, but getting that ready and going. I love that they have the supplier park, and I think we already talked about that in the previous clip. But it does sound overall like Rivian has placed itself in a pretty decent position as far as tariffs are concerned. And it sounds like they're going to produce LFP battery cells, the cylindrical form factor, as well as pouch cells. And the pouch cells will be for like battery type storage for backing up battery backup to your home or business. And then the cylindrical cells will be for EV batteries. And they'll start building the cylindrical cells sometime in 2026. So it makes sense that, like RJ said, the cells will be ready for Rivian in 2027. But, right now they're not being built in the US, but they will be at some point. All right, let's move on to Claire McDonough's, who is, again, the CFO of Rivian. Let's move on to her opening remarks. And in this situation, I'm going to play more of her opening remarks than I normally play of a CFO, just because I do think they're, especially in this particular case, a little bit more relevant than some of the other things that CFOs talk about. So let's go ahead and listen to Claire.
As RJ mentioned, in the first quarter of 2025, we achieved $206 million of gross profit, which resulted in the second consecutive quarter of positive gross profit. This fulfills the gross profit milestone associated with the next $1 billion of funding expected from Volkswagen Group in association with our joint venture. This positive gross profit is the result of the hard work of our teams as we continue to focus on driving cost efficiency throughout the business. Importantly, when we isolate the first quarter performance of our automotive segment, we generated positive gross profit excluding the impacts of regulatory credits and depreciation. While our gross profit levels may vary over the next few quarters, given some of the policy impacts we expect to experience, we believe this milestone is reflective of the progress we have made taking cost out and driving towards profitability. As we look forward to launching R2, we expect a faster path to profitability as compared to R1. And we also expect that the volumes of R2 in our normal facility will help lower the total fixed costs per unit across all vehicles coming out of the normal plant. In the first quarter of 2025, we produced 14,611 and delivered 8,640 vehicles from our manufacturing facility, which was the primary driver of the $922 million of revenue in the automotive segment. As previously stated, first quarter deliveries decreased due to delivery of more EDVs than is seasonally typical during the fourth quarter of 2024, resulting in limited EDV delivery volumes during the first quarter of 2025. This impact on automotive revenues was partially offset by increased average selling prices due to proportionately higher consumer deliveries, as well as an increase in the sale of automotive regulatory credits. Total software and services revenue for the first quarter of 2025 were $318 million, primarily due to new vehicle electrical architecture and software development services, remarketing sales, and repair and maintenance services. Our total gross profit was $206 million, our highest quarter to date, which includes $92 million from automotive gross profit and $114 million from software and services gross profit. Our adjusted EBITDA losses were negative $329 million as a result of the ongoing investment we are making to develop R2 and our key technologies, as well as the continued growth of our sales and service infrastructure and organization. These operating costs were partially offset by our $206 million of positive gross profit. As of March 31st, 2025, we had $7.2 billion of cash equivalents, and short-term investments. In addition to this, we expect to receive up to $3.5 billion of incremental capital associated with our joint venture with Volkswagen Group, up to $6.6 billion loan from the Department of Energy associated with the build-out of our Georgia facility, and have access to $1.3 billion of availability under our ABL facility that we recently amended and extended through April 8th, 2030. Included within the $3.5 billion of incremental capital expected from the Volkswagen Group is a $1 billion investment related to the gross profit milestone we achieved in the first quarter of 2025. Subject to customary closing conditions, Volkswagen Group is expected to invest $1 billion in Rivian common shares at a 33% premium to our stock price based on the volume-weighted average stock price from May 15th to June 27th, 2025. The investment is expected to be funded on June 30th of this year.
Okay, so just to recap here, we have the production numbers. They're sitting at 14,611 vehicles produced. They delivered 8,640. Claire mentioned that the reason for the difference in production, such a big difference in production and delivery, was that the electric delivery van deliveries were down. So, maybe they still made a profit. They just might have got overzealous too on how many cars they thought they would sell. But $92 million in gross vehicle profit, and then $114 million coming from the deal that they have with Volkswagen Group, plus that $1 billion investment. Not a bad quarter for Rivian. Now Claire's going to talk a little bit about trade and tariffs and that kind of thing.
Policies and regulations, macroeconomic impact on consumer behavior, and supply chain impacts from trade and tariff policies could impact our 2025 expectations. We're also monitoring potential impacts on our production due to the export restrictions on rare earth materials coming from China. We are actively monitoring these developments and working to mitigate potential risks through a variety of initiatives, including strategic sourcing and proactive engagement with policymakers. While we expect tariffs to impact our material and trade duty costs, with respect to batteries, we currently believe we have enough cells in the U.S. for production through 2025 and into early 2026. In addition, we plan to source our R2 4695 cells from LG, which, as RJ said, we expect will be manufactured here in the United States by early 2027. As a result of these impacts, we have revised our delivery outlook to 40,000 to 46,000 vehicles. Due to our strong first quarter results, we are maintaining our outlook range of adjusted EBITDA of negative $1.7 billion to negative $1.9 billion. We also continue to expect to achieve modest positive gross profit for the full year of 2025. In addition, due to the expected impact from tariffs, we are raising our capital expenditure guidance to $1.8 billion to $1.9 billion. We remain on track with the expected shutdown to both our consumer and commercial manufacturing lines in our Normal plant for approximately 1 month in the second half of 2025 to prepare for the launch of R2 and Normal in the first half of 2026. This is the first line of production for our new midsize platform, and as a result, we intend to operate R2 on a single shift of production for the majority of operations in 2026.
All right, so we have some cautious messaging from RJ and Claire. Cautiously optimistic, although I don't know if they're that optimistic about the trade stuff that's going on, but some cautious messaging. Limited R2 production as they ramp, and it sounds like in all of 2026. One line, one shift does not seem like they are expecting. Well, let's put it this way. Why would they do one line, one shift? One, and this is just me spitballing here, right? I don't have any inside information, nor do I have any particular insightful information to give you. But I would imagine that maybe some of the parts, they're expecting delays on the parts, and they don't want to. They want to have one line that just continues to chug out vehicles without having to shut the line down, because whenever a line gets shut down at these production facilities, there's always negative news about it. Another reason could be, the how do I put this nicely? the unforeseen costs of tariffs if these pauses go up and instead of kind of stabilizing. So they would be able to kind of manage expense a little bit better while still keeping the price right where they would like it to be. I don't think that they're doing one line, one shift because they expect that people aren't going to buy the vehicle. I don't think this is a demand problem. I think this is either they're concerned because the prices with the tariffs are kind of unknown at the moment. And this allows them to control costs, or they might be concerned that one or a few of their suppliers may not be able to, maybe the tariffs will be so high they just can't get them in, and they had to spin up suppliers or bring on suppliers from other countries to kind of diversify that. And I'm not saying all of these suppliers are coming from one particular country, because I'm sure, Rivian is smarter than that. I'm just saying a lot of turmoil isn't the right, a lot of uncertainty. So it does make sense to me that in 2026, they might want to control some of that uncertainty with their new product line, because the last thing they want to do is build a bunch of R2s at a significant loss, right? Like I said, they don't want to shut down production lines because that looks like they're failing at something. I just think this is, I don't know for a fact, but I just think that this is a way for them to kind of manage those potential losses. Because I think if things were a little bit more stable and they could build these vehicles at as fast as they can build them and sell them, I guess, as fast as they could build them, they would want to do that. So they're being cautious, and you know what they should be. They probably learned quite a bit launching the R1T and the R1S during the pandemic. That was probably a hard learned lesson for them. So we'll see how Rivian does, but I would imagine they're going to continue just slowly chugging up that mountain, the little EV company that could. All right. So next up, we're done with all of the opening remarks stuff. Next up, we're going to get analyst questions.
Our first question will come from Dan Levy with Barclays. Please unmute your line and ask your question.
Hi, good evening. Thank you for taking the questions. I wanted to first start with a question on batteries and the tariff impacts. I appreciate the disclosure that you have enough cells to get you through into early 2026, but perhaps you can give us a sense thereafter what your strategy is, especially around LFP. I appreciate that you do have the cells for R2 eventually going to be from the US, but what's your strategy around LFP? And if you could just confirm, are the LFP cells tariffed as an automotive product at 47.5% or as a non-automotive product at 145%?
Yeah, thanks, Dan, for the question. Yeah, certainly we've been spending a lot of time looking at just the overall landscape around trade, and certainly that has a big impact on battery tariffs. For us, as you said, through the end of 2025, we have inventory that provides us resilience to any increases in tariffs. As we look at 2026, very importantly, with the launch of R2, the 4695 cell that we're using is initially sourced out of Korea, but we've been for a while now working very closely with our partner on this, which is LG, to localize that into the United States. And starting in 2027, those cells will be produced in Arizona. And so that's outstanding for us in terms of the long-term cost structure for R2. And then as it pertains to R1, both with the 2170 cells that we're using as well as the LFP cells, this is something where we're actively working to address some of the changes in trade. And we have the flexibility to be looking at alternatives and to be thinking around how do we evolve our cell sourcing strategy for R1 as we look at 2026 and beyond.
I'm not 100% sure that this answers the question. Instead, I think it just rather kind of restates what they said previously in terms of their battery cells. They're going to be produced in Arizona in 2027. We've got enough for now. We're going to continue working with the presidential administration on tariffs. Right now, there's a 47.5% tariff or a 147% tariff. I would like to know which one of those the battery cells are going to be taxed at, because I do think that is significant for Rivian's financial future. And it may be that at this point in time, there's enough ambiguity in, how the tariffs are being distributed. There might be enough ambiguity to say we don't know. But if you don't know, it's okay to say we don't know. It's I don't think a lot of people know, including people in the Trump administration. So and other business leaders that are out there as well, from the earnings calls that I've listened to, at least. All right, let's get to our next question.
And then B, if you could just talk to broadly how you see the COGS of R2 being impacted. So appreciate the battery commentary, but what other cost considerations are there R2? How dramatically does this change the cost structure for R2?
Sure, Dan. We expect the per unit direct impact from tariffs to be a couple $1,000s for 2025 based off of the currently announced tariffs in place. And as you can imagine, we're exploring a number of offsets to those cost increases, including strategic sourcing decisions, as RJ conveyed, related to some of the batteries over the longer term. And beyond those strategic sourcing decisions, also have the opportunity to explore opportunities for us to see how we're deploying our incentive spend or drive improved mix, which will help further offset some of the impact from tariffs themselves as well. Maybe I'll invite Javier to jump in as well as we think about R2 sourcing, where there's certainly more opportunities in the longer term for us to strategically adjust some of our sourcing strategies and approach to mitigate some of the longer term impacts.
Yeah, thank you, Claire. Yeah, we have been working for a while in getting a more resilient supply chain. And as a result, we are sourcing from the U.S. and the USMCA qualified region heavily. Though there's some flows coming from overseas, for those flows, we typically use global suppliers that they have facilities in the three regions, in Europe, in Asia, and in North America. And we still have time to relocate or study some of those flows in the next months before the launch of R2.
Okay. Again, I don't know if I think that was a better answer, but I don't know if it's a particularly insightful answer. I think the team at Rivian is fantastic. They are way smarter at business than I am. So I feel confident that what they're doing to manage tariffs and just the kind of general rising cost of things, even if they don't have to do with tariffs, I think they want to keep these vehicles affordable, or as affordable as possible. I don't think they want to announce the R2 and have to say, well, the starting price is going to be $50,000 if you didn't pre-order before such and such a date. I don't think they want to do that. So tariffs, Claire said the tariffs, I think Claire said this, a few $1,000s to each vehicle in 2025. So that's the impact on the current R1 platform. What does that look like in 2026? Because I don't, and maybe I missed it, but I don't remember hearing what it looks like in 2026. Hopefully, this whole tariff war will settle down, and we'll get some normalization for pricing, and companies will be better equipped to talk about this stuff. All right, our next question comes from Adam Jonas, and he's going to ask about autonomy, and more specifically, like autonomous driving.
Our next question will come from Adam Jonas with Morgan Stanley. Please unmute your line and ask your question.
Thanks, everybody. So first, RJ, I want to ask you about autonomy. The pressure to compete with Tesla just gets more and more intense as FSD makes further progress. How are you going to catch them and match them technologically with such a small fleet and less computing resources and having a later start on moving to end to end? And how confident are you can develop this in-house, or do you need an external partner to help speed things up?
Yeah, thanks, Adam. I appreciate the question. This is such an enormous focus area for us, and as I said in my opening remarks, I mean, we couldn't be more excited about this part of the business. It's an area we've spent a lot of time on getting the plumbing in place, meaning getting the right sensor set with our Gen 2 vehicles that launched. So dramatic improvement in sensors, a lot of onboard inference in terms of the compute level in the vehicle, and then very importantly, that feeding our data flywheel. And as we think about our performance and the need to grow our performance, the data flywheel is really important. It's not just how many vehicles are out there, but also the quality of the data coming off the vehicles. So the very high performance cameras that we have that have great low light performance, great bright light performance, coupled with a multimodality approach to sensors, where we have 5 radars, including a front imaging radar in the vehicle, allow us to make up for some of the fact that we have a smaller fleet. Of course, the fleet's growing, but make up for that with very high quality data. And then, as you alluded to, that training that happens for the offline model, the large parameter model, that's happening through the data that's coming off these vehicles. And so we've seen incredible performance with just that in place. We've just started to, consumers are just starting to see some of the work that we're doing with the hands-free feature that we just launched. But over the next year, as both the fleet size grows, the data flywheel I talked about continues to ramp up further and further, and then the efficacy of this really rich data set where we control the triggering events, so what data we take, and then we control what goes up, meaning we have every vehicle, of course, has LTE, but a significant majority of our vehicles are also on Wi-Fi, so we can very cost effectively move data from our car park into the cloud, and then therefore use it to train our model. So we're quite bullish on this. I think this data infrastructure I just described is very unique because we don't have any third-party camera systems or platforms that are in the middle of that either obfuscate or create abstractions of the data. We have raw data that goes up and allows us to really use that effectively for an end-to-end model with a pure AI-centric approach.
So I don't think it's crazy to say that with where artificial intelligence is today, Rivian and other companies that are trying to solve full self-driving, these companies have an opportunity to enter this data, even though Rivian's fleet is smaller, even though they've been doing it less time. They can enter this data into an AI model, and they could probably do somewhat more. This is when I say somewhat, I mean, I realize there are edge cases that we're not going to catch here, but they're able to do somewhat more than Tesla was able to do even 5 and 6 years ago, simply because where we are now with AI. And then you couple that with right now, we have suppliers for automotive companies that are specifically building parts for the purpose of full self-driving. Whereas when Tesla and Waymo, for instance, started out, they had to, buy kind of off-the-shelf parts and then program everything from the ground up so that you could actually the car would actually drive itself. And then, they had engineers in the car and they were trying to solve for all these problems and test drivers and all that stuff. You probably don't have to do as much today as Waymo and Tesla did 5, we'll say 10 years ago, right? Waymo's been around for a long time, or Google's self-driving car efforts have been around for a while. And then when you couple that with the fact that there are engineers in the workforce right now who not only worked for Tesla and Waymo, but they also worked for other autonomy companies. And some of these engineers, were there at the beginning. So Rivian doesn't have to overcome the same hurdles that Tesla and some of these other companies did. because those hurdles have already kind of been solved. Now, there might be a different way that Rivian wants to do things, different than what Tesla or Waymo or any of these other companies are doing. And that's fine. They'll have to still, they have to solve problems. This isn't like a set it and forget it. It's not a WYSIWYG web builder, for instance. It's not like Squarespace. You can't just plug it in. And it mostly works with a few tweaks here and there to personalize it to you. Still a lot of work to be done, but it's not the same amount of work that companies who did this early on had to do. Elon is very fond of saying that Tesla is years ahead of other autonomous companies, and they're all doing it wrong, or some of them are doing it wrong. I don't want to say they're all. I don't want to put words in his mouth. But here's the thing. As Tesla gets closer to solving level 2 driving, because they're not at level 2. I saw somebody on X the other day said that Tesla is really level 2.75. There's no such thing. That's nonsense. Almost said a bad word. It starts with a B and has an S in it. That's nonsense. There's level 2 and there's level 3. Now, Tesla's really good at level 2, but they're not at level 3 yet. We'll see what happens when they launch in Austin, how that goes. Hopefully it goes well. But you could argue that they're not even at level 4 if they have to have people remotely monitoring the vehicles, right? That might fall more into level 2 or level 3. I don't know if the Society of Automotive Engineers has considered what needs to happen, where it falls if you have a remote driver but no physical driver. I don't know where that falls. I would imagine it falls under level 4, but if there's a lot of interventions or the remote driver is expected to take over at a moment's notice, it's probably level 3. But the point is they're still on level 2. And they might have a more advanced level 2 than other folks who are working on this. And, for the most part, Waymo's just drive themselves around my neighborhood. I don't know much, or the area that I live in. I don't know how much remote operators are intervening. I don't know that Waymo makes that information public, but it very much seems like they're just cruising on their own. Like, it is not uncommon, nor is it. It's not like ooh, look, that car doesn't have a driver anymore. I probably passed. My daughter and I went out to breakfast this morning. I probably passed at least 3 Waymos that I probably didn't even notice that they were driving themselves. Like, we've become blind to them. They're so common here. So my point to all of this is they don't have the same struggles. And as Tesla gets closer to solving full autonomy, it's going to get harder. And all of these other companies that are behind will have a chance to catch up. Now, if Tesla is successful and solves level 5 autonomy, then that's great. They will be significantly ahead again. But as they try to solve for that level 5 autonomy, things are going to slow down for Tesla, because Elon even admits this. Like, as you get closer to solving that, it gets infinitely harder. All these other companies are going to be able to catch up. And if you couple all of the stuff that I talked about at the beginning of this diatribe with that, I don't think Rivian has to worry. Also, I don't see a lot of my friends who are looking, a lot of my friends like the Rivian pickup truck. I don't see a lot of my friends who are looking at electric vehicles even caring about autonomous driving at this point. I've talked enough. Let's move on to our next question.
You called out rare earth supply specifically and said that you will explore strategic sourcing to mitigate for rare earths, which are so critical for the powertrain specifically. What exactly are you doing? Can you do in the event that China were to make sourcing of such materials or the processing upstream less available? I just want to know exactly what those efforts could be. Thank you.
Yeah, this is a complex issue, as you call out. It's something we're working on really, really thoroughly. And given that a lot of the processing of of some of these heavy rare earth metals that are used in magnets, which is particularly important for a electric vehicle, which is using permanent magnet motors. We're very close to this situation, and it's quite dynamic as we think about the overall trade environment. Now, saying that there are an array of different solutions to solve this, and I think importantly for us as we look out in the longer term, planning for R2, developing around heavy rare earth free motors, so using different types of magnets that are more available, and then of course in the longer term, developing rotor assemblies that don't require rare earth metals. And so this has long been talked about as a technical topic. I think we're going to start to see the beginnings of that start to reach commercial deployment, and certainly some of these trade challenges are going to accelerate that.
I don't have much to add to this. I do know that we hear oftentimes that automotive companies would like to use less rare earth metals than they are currently using, because that rare earth metals are not, they're not limited. Like we have a lot of rare earth metals. They're called rare earth or materials because, again, they're not particularly rare. It's just, it's hard to extract them and then to maybe even separate them out from other elements. And then they tend to be concentrated in certain places. It's not to say that, you'll find plenty of cobalt in the Congo, right? But maybe you might find a little bit in, I don't even know if Idaho has any, but you might find a little cobalt in Idaho, but it's not going to be enough to make a difference. Like the deposits tend to be in specific regions, and the companies and sometimes the governments that happen to be in those regions are maybe not, they don't have the best reputation for human rights, environmental issues, responsible sourcing, that kind of thing. And then, if you're being U.S. centric here, our U.S. government might have not the best relations with these companies, and that's not an administration thing. That goes far beyond that. So, or a political thing. Well, it is political, but it's not U.S. politics; it's global politics. So, so companies, especially U.S. companies, would like to be able to diversify their supply chain, and by not or using as little rare earth materials as possible, then that allows them to be more flexible in the supply chain. Whew, that was really hard. Really hard. I don't want emails, is what I'm saying. I'm trying not to be political, and I don't want emails, because no matter what administration I'm talking about, somebody is going to send me an email about how I'm this way of a political thinker, and then somebody else will send me the exact opposite, how I'm on the other side of the issue and not on. Anyway, doesn't matter. Let's get to the next question.
Our next question will come from Mark Delaney with Goldman Sachs. Please unmute your line and ask your question.
Yes, good afternoon. Thank you for taking my questions. With respect to reducing the full year outlook for deliveries, can you help us better understand, is that based on weaker incoming orders Rivian has already been seeing, or purely an expectation that the market is going to deteriorate going forward as you think about tariff costs and the effects on pricing as well as the broader economy?
Thanks, Mark. There's a lot of uncertainty, and I'd characterize it as there's a challenging backdrop from a consumer demand point of view. And what we're seeing is, the interest in our flagship product R1 continues to be strong, in that, this is the R1 is the best selling premium electric truck or electric SUV across the whole United States, over $70,000. And it's the best selling premium SUV, electric or non-electric, in the state of California. And so in terms of how our products are performing relative to, alternatives in the market, we're doing extremely well. The challenge is consumers are more price sensitive than they typically are, or typically have been, I should say. and are looking for lower priced alternatives. And this is what makes us so excited about R2. And the R2 price point starting at $45,000. If you look at even just in Q1, the average across both R1 and our commercial van, the average selling price is $88,500. So, and that's with the vans included. And so we have a very high ASP, which is a great thing on our flagship product. But by virtue of that, the size of that market is just more limited. And I think in this environment, with the level of uncertainty, it becomes even more constrained in this backdrop. But if we can have a fraction of the success we have with R1 in the much bigger market that R2 is operating in, much bigger market that R2 is operating in, we'll be very happy.
All right. I don't have much to add on that. I don't know if I mentioned this earlier or not about Rivian producing more vehicles than they delivered. It sounds like, and I just don't know if I've talked about this or I put this explanation in this. This has been a 3-day long podcast that started on Friday and we're now on Sunday. So, apologize if I already said this, but they produced more vehicles than they delivered in Q1 2025. They produced 14,611 and they delivered 8,640. Now, I know that we talked about that for sure. What I don't know is Claire had mentioned somewhere along the line that they produce these vehicles because they're largely untouched by the tariffs and they can kind of sell those vehicles throughout the year. And I don't know if this is an accounting thing because those vehicles didn't cost as much money to make, so they can do some creative accounting by releasing a few thousand here, a few thousand there. I don't know what the actual reason for doing that is in terms of a business reason, but that would be my guess. Is it's some sort of accounting measure where they can kind of add those vehicles in for sales to help their numbers, if I had to guess. Anyway, let's move on to our next question.
Our next question will come from Philippe Bourgeois with Jefferies. Please unmute your line and ask your question.
Yes, good afternoon. It's Philippe Bourgeois, Jefferies. If I can follow up on the question from Joe on inventory. I'm surprised the inventory didn't go up more than the 250 million, considering the overproduction with Claire you just said about shifting some of the depreciation into inventory and also the fact you hold more batteries. Did you do any action to actually free up some capital from that inventory?
Sure. The dynamics that we saw in the quarter was both a reduction in our raw materials by about $220 million. And then we did have a significant increase of roughly $563 million in our finished goods inventory as a whole. And part of that was and maybe I'll have Javier jump in as well. But we're very focused on driving towards more lean manufacturing principles from a logistics perspective. But Javier, if you want to comment on some of the initiatives at hand.
Yeah, indeed. In the last months, we have been focusing in accelerating lean manufacturing implementation in our operations, focusing on the flow, on compacting our processes, improving the workstations, empowering the front line to continuously improve the process, and particularly in our just-in-time operations. So we are heavily reducing our inventory in incoming material, the days on hand, not only in the plant, but as well the flows that are coming from the suppliers to our plant in the cross docks or whatever is on the trains or in the trucks. So that's a great contributor to this cash free reduction of the working capital.
Okay, I don't have much to add on this. I actually skipped several questions that asked different forms of this question, but I thought that I was on the fence. Do I keep it in or do I not? We're running long, but as far as this question goes, it kind of encapsulated a lot of what other people were asking, so I left it in for that. Next up, we are going to find out if Rivian's autonomy efforts will be shared on the Volkswagen platform. with their joint venture.
And then maybe a follow-up on your autonomy platform. Is that part of the technology you would potentially share with Volkswagen, and particularly on using the Volkswagen volume market share to acquire more data on the sensors? Or is that separate?
Thanks, Philippe. Yeah, the our autonomy platform is entirely separate from our joint venture. The joint venture captures our operating system and software platforms across our zonal ECUs, and then also includes the zonal ECUs themselves, but doesn't include our in-house compute platform or compute stack or the perception stack that we've developed, and of course not the foundation model and the work that's going into the software to drive our self-driving platform.
So that certainly sounds like a no. But if fleet size really is an issue when you're collecting data and all this stuff for autonomous driving, and you need to grow your fleet, what better way to grow your fleet by partnering with a company that you're already working with on autonomous driving? And I'm sure Rivian would like to keep this, as much of this technology they're developing as theirs, because it's basically like printing money if they ever do decide to license it. But if they need to overcome a hurdle, they have a great partner in Volkswagen who sells a lot of cars, way more than Waymo does, or than Rivian does, and Waymo, if I'm being honest. All right, let's get to our next question, which I skipped a couple of different questions. So the next question happens to be about autonomy. So let's listen.
Understood. And then follow up on autonomy. I'm wondering if you could share your latest thoughts on the economics of that. And it could, I guess there's two elements. There's the cost of getting there, and there's the sort of monetization. And if there's any kind of more updated numbers you could share, perhaps on if the pricing this could ultimately be. Would it be similar to FSD? Would there be subscription offering? Something along those lines. Thank you.
I think this is a part of the business that's going to evolve a lot over the next 5 years. And the way we think about it is, first and foremost, increasingly customers are going to want to see higher levels of autonomy. I said this earlier in my opening statements, just around the importance of going from a hands-on, eyes-on approach to hands-off, and then very soon hands-off, eyes-off, which is where you get your time back. You can use the time to be on your phone, reading a book, doing something else with a hands-off, eyes-off, and then ultimately having that work across any type of road, so urban, highway. And so we see this as really critical from a customer experience point of view. And the way these systems are developed now is so different than what the world looked like just a few years ago, with transformer-based encoders and using an end-to-end training approach where we're building truly an AI-centric approach, and think of it like a foundation model in the LLM world, where there's a large parameter model that we understand how the vehicle operates within the physical world, and a distilled version of that runs in vehicle on our inference platform. And so we're very bullish on the technology. We think the changes that have happened in terms of use of transformers is completely shifted how we look at this just in the last couple of years. It requires vertical control of the sensor set, meaning it's impossible to design a system that has multiple third parties that are providing sensors or creating any layers of abstraction amongst those sensors. And so with all that said, we really believe this is going to be a key value driver for customers. Now, the question is, how does that value get harvested? So does it show up as an incremental paid feature? Does it show up in vehicle pricing? Does it show up in market share? I think it's yet to be seen. We certainly have lots of hypotheses internally, but ultimately it's going to show up as value to the business in some way. And it's interesting watching the difference in the ecosystem here in the West, or in particular in the United States, versus the ecosystem that exists in, let's say, China. And what we're increasingly see happen in China is that the self-driving features and capabilities are being used to drive market share. They're being used to drive sales. That is a path it could go, but it really depends on the competitive landscape. If there's only one or two brands or one or two companies that have this type of capability, we may see it show up more as a paid feature.
Okay, I thought this was a good answer. I'm not going to add anything to it because we're already running long. And The next question I think is even better than the last question. This was a good earnings call. Normally I cut off a lot of the earnings call and we get out of here in, 40, 45 minutes, but there was a lot of good questions and a lot of good answers. So hopefully you're still with me and you haven't dropped out at this point. So let's get to the next question.
Our next question will come from George Gianarikas with Canaccord Genuity. Please unmute your line and ask your question.
Hi, good afternoon. Thank you for taking my questions. There's a debate around how to increase EV adoption. Obviously, you're bringing the R2 and R3 to market to help lower price points. To that end, some companies in China are introducing, faster charging batteries with likely faster battery degradation as well. We obviously need more charging network density. Can you sort of talk to us about any technologies you're trying to bring to market to make that happen, maybe around batteries to improve EV penetration in the US and the West? Thanks.
Yeah, thanks for the question, George. I love this question. I think it's an important one. I think there's a few big elements here, and one could debate what's the most important or the biggest. But in our view, in the United States in particular, there's a pretty extreme lack of great choices. And when I say an extreme lack of great choices, in particular, price points that start below $50,000. And in order for us to see large-scale adoption of electrification, we need to have enough selection in terms of brand, the design or the look of the vehicle, the form factor, the segment. And if you think about it in terms of consumers coming out of ICE vehicles and finding their way into EVs, there's hundreds of choices you have in the ICE world for products under $50,000. And there's a very, very small number of compelling choices of EVs under $50,000. And there's an even smaller subset of different form factors. And so as a result of that lack of choice, we've seen, significant market share consolidation with Tesla. And they've got, great products with the Model 3, Model Y in that price category. But the market needs more choices. And this is why we're so excited about R2. We really believe this is something that will give consumers an alternative and a choice that's really interesting. It's going to help pull more people, we believe, out of internal combustion into electrification. I spent a lot of time in the product. I was just in Arizona driving it. It is absolutely incredible. The dynamics, the function, of course, for us knowing all the work that we put into optimizing the way it's manufactured from a cost structure point of view. I just couldn't be more excited about what's coming with R2. But saying that, there's other elements here, and I think building out charging infrastructure is an important one. For us, within Rivian, what we've done is we have a relationship with Tesla, allows our customers to use the Tesla network, but we're also building out our own network. And in fact, we referenced it in our shareholder letter. But this is our network is. There's really only two networks that have the level of uptime that we have. Tesla's network, which is outstanding, and our network, which is we have over 700 chargers. The uptime is higher than 98%. And so Consumer Reports actually called out specifically our network as being incredibly performant and very easy to use, which is great to see. So we're continuing to scale that network. It's an open network, so it's also revenue generating, which helps build the acceleration of the flywheel, if you will, of that network being expanded. And I think the last piece, which actually ties to the question that came up before, is not for technical reasons, but for but in some ways by coincidence, autonomy and electrification are often interlinked. And so I do think the growth of autonomous features and what we're going to see as we look out into 2027 and 2028 will help draw more customers into electric vehicles. Certainly, we feel that way about our own products. And so we're quite bullish on what that will represent in terms of driving consumer behavior.
I agree with pretty much. Okay, I agree with everything that RJ said here. Here, I do have a different take on it a little bit, though, because the Chinese market is using these features to drive sales at a very low price point for the consumer. Like, it's a very competitive market in China where it is not as competitive here in the US. And I don't think that we're seeing automakers doing a whole lot to differentiate themselves. It is true that autonomous vehicles and electric vehicles kind of go hand in hand, right? They're kind of synonymous with one another when you think about it. On the other side, those features cost money. You can buy an EV, but then can you afford to pay 4, 5, 6, 7, 8,000 at one point with Tesla, $14,000 for autonomous driving features? I think what I would like to see here is what features is Rivian going to be putting in its vehicle that is going to set it apart from a Model Y, right? So if someone was looking to buy a Model Y right now, I'm going to put myself in a fictitious person. I'm not me. My name is, Jimmy Hot Wheels. And Jimmy Hot Wheels wants to buy an electric SUV like the Model Y or electric crossover. So I'm looking at the GMC or the Chevy, not Enclave. What is it? The Chevy Equinox. And I'm like, oh, I kind of like this, but I don't like the infotainment system that Chevy built. So I'm not going to buy any Chevy products. And then I go to look at the Model Y, and I'd say, you know what? I don't love the Model. I love the Model Y. I don't love Elon, so I'm not going to go with the Elon. And then you go to Rivian, and you go, yeah, I like this. This is great. What's the differentiator there? There's really not one, right? There's really not. They're kind of, although the Equinox is not in the same class, we'll say the Chevy Blazer. Those are all three kind of the same car. They kind of offer the same features. They're not differentiating themselves other than it looks a little different. The infotainment screen's a little different. The guy who runs the company or lady who runs the company is different. But in general, what features are you giving people that are unique? You could be pushed one way or another depending on a variety of things. Like if you wanted a world-class safety rating, the Model Y's got a world-class safety rating. But and that's fine. And the Equinox probably has a pretty good one, and the R2 will probably have a pretty good one. There's just not enough that differentiates the market here in the US. In China, you can buy or pretty much anywhere in Asia or now Europe, you can buy a Chinese built vehicle. It's going to be pretty good and it's going to be affordable. And then they're throwing in BYD is it's not on the lowest tier vehicle, but on the one up from the lowest tier, you get free autonomy or autonomous driving features. That makes a difference. That shows that in China that's a competitive market. Here in the US, we're not really having anything like that. They may give you free charging miles. I don't think that's a good enough benefit. They may give you a certain amount of time free for autonomous driving features. Maybe that's okay. I don't know. It wouldn't really sway me one way or the other if I was looking at two different cars and I was close. How would you like to see these automakers differentiate themselves from one another? Like, what kind of features are important to you that aren't standard? Like regenerative braking, that's pretty much standard by now. So we're not talking about that, but what one thing in a vehicle do you find super important and would make you buy it over another vehicle that was pretty much equal? Send me an email, Bodie, BODIE at 918digital.com. And let's get to our next question.
Next question will come from Ben Callow with Baird. Please unmute your line and ask your question.
Hey guys, have you seen any uptick just in demand from everything going on with Tesla? And my second question is about Slate Auto and what that means to you guys. Thank you.
Yeah, it's as we talk about consumer choice, and Tesla's got an incredible set of products with the Model 3, Model Y. The vast majority of their volume is there, and the price point's quite a bit different than our flagship product. So, our flagship product ASP is roughly double Tesla's Model 3, Model Y. And so while you certainly do have some cross shop, really R2 will be much more of a similar product in terms of pricing, very different in terms of execution. And again, jumping off the previous points I made around the need for product selection and diversity of choices, the Slate product is a very different consumer than a Rivian product. And I'll always say this, I think it's really important that we have lots of choices, and those choices are not all on top of each other in terms of price positioning, customer demographic, vehicle form factors, vehicle positioning. So I'm always pleased and encouraged to see new product concepts, new product ideas emerge. And this is one that's certainly not at all playing in the same spaces where Rivian operates today.
Okay, this is the problem. I have not listened to this earnings call, so I am going through it as we go through it together. So this is great. Like the perfect example of a company that's differentiating itself is the Slate, or is Slate, I should say. Great example, right? It starts at $27,000, $27,000. It looks like it's not going to qualify for the U.S. federal tax credit because there won't be one by the time it comes out. But still, $27,000 is not that bad in terms of price. And then it's the differentiator is that you can do not whatever you want, but a lot of what you want to do with this vehicle. You can turn it into the vehicle that's customized for you. I don't know what that does for the resale value, but the next person can turn it into the vehicle that's customized for them if they want to. So that's a great example. All right, let's move on to the next question.
Our last question will come from Itay Michaeli with TD Cowen. Please unmute your line and ask your question.
Great. Thank you. Good afternoon, everybody. Just had two clarifications back to the autonomy platform. First, are you still on track to launch eyes off in controlled conditions next year? Maybe talk about kind of what you need to see to do that. And secondly, with R2, should we think about that as having a standard autonomy hardware system, or could we see potentially different iterations on that platform depending on the trim level? Thank you.
Yeah, we are. I referenced it a couple times, but we just put in place a hands-off, eyes-on feature, meaning you still have to be looking at the road, but your hands can come off the wheel for highway application. That's going to broaden to more urban roads as well. But importantly, moving to hands-off, eyes-off. So what you might call a true level 3 is something we're very focused on, and delivering that in specific environments, starting with highways next year is really key for us. Now, on the R2 side of things, we do have a slightly enhanced perception stack that's going on R2 relative to R1. So it's a 65 megapixels of cameras. So we've made further improvements in our camera set relative to R1. Now that's noteworthy because the R1 camera set today is the highest performing camera set that's on any vehicle sold in North America. More megapixels than any other vehicle, and the dynamic range on those cameras is just incredible. When I say dynamic range, I mean the performance in very low light conditions or in very bright light conditions. And I referenced this when I was responding to Adam's question earlier, but that breadth of performance of the cameras, and then feeding that entirely owned a set of signals into our platform, allows us to really accelerate the training with this really high quality data, particularly when it's combined with the radar set that's on the vehicle. So we have 4 corner radars that are traditional, pretty straightforward radars, but the front center radar is an imaging radar. So it gives us X, Y, and Z, and that provides a really nice additional modality for which we're training our system. And when we think about these end-to-end models being trained, the more robust the data set, the faster we see progress. And in fact, it's been helpful to see that same phenomena play out in the LLM space, where the quality of data has become increasingly important. So how the data is selected, partitioned, and fed into the model becomes really key. So with all that said, we don't envision having an R2 that doesn't have a very robust autonomy platform built into it, because we think it's such a critical part of the customer experience. And as you know, as we see what's coming with the feature set, it's we don't envision our products not having that level of capability.
I don't either. I think that they're going to get where they need to be. However, the timeline seems unrealistic to me, but I could be wrong. I could be very wrong. I would love to be wrong. I'm just basing it off of where, their closest competitors are. Mercedes has some level 3 autonomy based on, you can't be going over such and such a speed. You got to be in this location. There's got to be some regulatory approval for that to happen. So, yeah, I would love to see them successful in this area as soon as possible. But I think this is a good question to end it on. And if you want to email me, you can do so. It's Bodie, BODIE at 918digital.com. Again, if you would like to help me out with my little project that I'm working on, and you want to know how to think like a first responder in an emergency, send me your questions. Bodie, BODIE at 918digital.com. I will thank you for your email, and I may answer some of your questions in the email, but I'll probably roll all that stuff into the segment that I'm looking at. What else? Oh man, I feel like there's something else. Next Friday, we are going to have ARC Motors. So Friday the, 5th? Let me look in my calendar here. Friday the 6th. We have the founders of ARC Motors, and what they do is they convert classic ICE vehicles into electric vehicles. So pretty cool company, and I think you're going to enjoy that as well. Tuesday, we're going to have news, and then at some point soon, we'll do Lucid's earnings call as well, and that will do it for Q1 earnings calls. All right, everybody, let's get to RJ's closing remarks. And then after that, you're going to hear music, and we're all free. And if you're looking for another podcast after this, I just got an alert that Bart Bouchat's his Let's Talk Apple podcast just released a new episode. So if you don't know, Bart talks about the previous month's news, Apple news on Let's Talk Apple. And the great thing about it is he talks all about the relevant stuff, right? There's a lot of the same topics are being talked on other podcasts, but because Bart only releases an episode once a month of Let's Talk Apple, he has time to let things like details emerge, and he gives good context. So if you're a fan of Apple, especially because WWDC is coming up in a couple of days, this is don't miss it. This is a must-hear episode of Let's Talk Apple. Later today, I will be listening to Let's Talk Apple, so highly encourage you to go check it out. All right, everybody, thanks so much. Here are RJ's closing remarks.
This concludes the question and answer session of the call. I would now like to turn the call back to RJ Scaringe for closing remarks.
Thanks everyone for joining us today. This is a really exciting quarter for us, being the second quarter of positive gross margin and our highest gross margin to date with $206 million. We're excited to continue driving cost efficiency throughout the business, and even more excited to see the effects that R2 will have on the business in terms of increased scale, sharing more of the fixed costs of our normal facility, and therefore driving even higher levels of gross margin profitability and ultimately profitability for us as a business. With that said, we're also incredibly focused on driving forward in terms of our autonomy platform. This is something that it took years of time to implement in our Gen 2 platform in terms of the hardware topology. And we're now just at the beginnings of seeing this nonlinear growth rate in terms of capability and features. And we'll continue to talk more about this. As I said earlier, we're going to be having an autonomy and AI day in the fall, and in that we'll provide a lot more visibility and details into our technology stack, both the hardware side of things as well as the software, and provide demonstrations of what some of this roadmap looks like. And hopefully everyone can see why we're so excited about this internal effort. But with that, thanks again for the call, and look forward to speaking with everybody next quarter.